solo 401k deadline is quickly approaching, but what deadline are we talking about? And what the heck is a solo 401k? We're going to talk about both of them. Let's get into it. All right, so I've been getting hit with a lot of solo 401k questions lately. It must be because everyone's businesses they started during COVID are really starting to take off, but also just being able to talk about the 401k more publicly is becoming more prominent. Everyone likes a solo 401k. There's a lot of business owners, sole proprietors, people just working for themselves that like the solo 401k because they get to defer more money in a taxable account and potentially even more than a SEP and a simple. A little bit more complex, but there's a little bit more value. So let's talk about it. So the deadline first. The deadline is December 31st to be able to create a solo 401k and make a contribution. But here's what I mean. When you have a solo 401k, you get to wear two hats. There's two sides of the coin. You are a sole proprietor, you don't have any employees. With a solo 401k, you can make employee elective deferral contributions to a solo 401k, and you can make employer or business contributions to a 401k. You can essentially double dip, and it's legal. I'm not even breaking the rules here. But to be able to make an employee contribution, your plan has to be created by December 31st of this year. But you get to make the employee contribution up until your tax filing deadline. And I should, I guess, clarify, I'm gonna talk a lot about employee contributions and employer contributions. So EE and ER contributions. The deadline of this year to create the plan, so if you create your plan by December 31st, it allows you to make an employee contribution for 2022, which is pretty cool. And just know, we're gonna circle back to this, the employer deadline is not the same. You actually can create the plan next year after the deadline just to be able to make employer contributions. So you have the tax filing deadline to build the plan and make an employer contributions. But if you want to make an employee contribution for 2022, you got to build the plan by the year end. So let's just talk a little bit about solo 401ks. Solo 401ks are phenomenal for a single business owner that does not have any other employees. A spouse can contribute to this as well. That's a little loophole. But if you don't have any other employees, this could be a great option for you. In most cases, pretty simple to activate and really simple to manage over the long term. Like I mentioned before, the IRS views the employee, or the owner, I should say, the owner is the employee and the owner, so you can essentially double dip. So you have the ability as the employee to add $20,500 for 2022 or $22,500 for 2023, depending on when you build the plan as an employee. Then in addition, you can put an essentially 20% of adjusted earnings into the plan as the owner. So you can actually put quite a bit in there. So number 3 is the overall limit. The overall limit for 2022 is $61,000. So that means of the money that you put in as the employee, and then the adjusted earnings as the employer cannot exceed $61,000 in a year, but if you're over the age of 50, it actually increases. And then in 2023, those numbers are actually gonna go up. But do know there's an overall limit. So if you make a lot of income for whatever you're doing in your business, you still can't put in more between the two than a certain amount. So there's a limit for them both. Number 5, I think I'm on number 5, but solo 401ks, they don't abide by ERISA rules, which works in 2 ways. One, it's a good thing because the reporting and the paperwork requirements are far less. But kind of the negative thing is there's no real credit or protection. You'll have to really evaluate if you need credit or protection. Maybe you can create a traditional 401k, which is fine. You might be able to use it in the same manner as a solo 401k. But the good thing, if you're not concerned about credit or protection, is the paperwork and the reporting requirements under solo 401k are far simpler than a more complex traditional 401k. So let's just reiterate at this point why the deadline comes into play. So now we know that employer and employee can make contributions up to a certain limit. So the deadline of December 31st is just the creation of the plan, sign the plan documents. You have until the tax filing deadline to make an employee contribution for 2022, and you can make an employer contribution for 2022. If you don't get that deadline done, you could still make an employer contribution for 2022, but not an employee contribution for 2022. So kind of confusing, but that deadline is very important. If you want to learn more about solo 401ks, comment below. I can continue to ask your questions and clarify. If you want me to help you build a solo 401k, I help build solo 401ks in clients' portfolios for their retirement planning regularly. I use a third party, Bill's Trust Documents. They're phenomenal. Let me know if you have any questions and comment below. You can also contact me directly if you have any more questions that you want to leave out of the public sphere. Thanks for watching.